So next up to amuse us and entertain us is Don Ginsel, who is the CEO of Holland Fintech. And he has a background in banking, but also investment in seeing how startups actually work, building an ecosystem. Don, the stage is yours.
Thank you. So, I'm not going to be about that much ass this time, I think so, but thank you for that. It was really enlightening, and I hope you can all follow. I'll probably talk faster, but use less complicated sentences, right? I'll try, at least. Now, to maybe give you a bit of an idea, I'm going to not talk that much too deep about payments, because I'm definitely not the expert in that, but we're really trying to look all across the financial value chain as a whole. Where we see, of course, that payment is quite a dominant factor, but we're really trying to make it work in a complete perspective. Because actually, people that are active in payments should actually also look at what's going on in insurance, or in asset management, or in capital markets, or in security, or in RegTech. And I'll tell you a little bit about more of those developments in a moment. Just briefly, what Holland Fintech is, we're basically an independent marketplace for the whole financial value chain. I'll tell you a little bit about that why, but basically it's easiest for us to actually, if you have an ambition to grow into Europe, we can help you do business development, or if you're actually looking for new solutions to build on top of, like these great R solutions that are just mentioned, for example, we can actually help you find them and connect them so you can actually build on top of that. We're based in Amsterdam, that's why we put Holland in the name, it was a bit silly, but okay. But we're actually happy to talk to anyone. We work for over 350 companies at the moment, and that's still expanding pretty widely. And the whole core of what we do is basically conveying the message over and over again about all the possibilities that are out there. Because we see that people lack a lot of knowledge on basically the disruption that's going through the value chain. And the disruption is not about startups taking over from existing companies, it's all about little changes that altogether change everything. But because there are so many actors involved, it's really relevant to actually figure out what everyone's doing. But it's pretty hard because it's about thousands of companies. And we're trying to make that insightful on what's really going on and connect you to actually the ones that are relevant for you. Well, as mentioned here. Besides that, we also look into regulatory development, making sure parties have sufficient capital to their availability. And of course, I think one of the main topics that we'll discuss also later is talent. Yeah, I think it works. These are our achievements so far. So we do about 120 events a year. We write a lot, we research a lot, and we try to actually give everyone access to all that is out there and try to make it digestible so you can actually just keep on doing your regular job without actually being bothered by everything going on outside, but still be in the know. And one thing that's important to understand is that fintech is not fintech anymore, because I think where we started 3.5 years ago with Holland Fintech, it was all about this one thing, startups disrupting banks. And if you actually look at how the landscape has evolved so far, you see that actually the whole fintech era has been split up in different tiny pieces, in multiple disciplines, where parties have different interests and like to get together also in that flavor. And I think already you see it here, because one of the successes, for example, of this conference is actually that you're just here with the payment people and people willing to look at a transaction for merchants has a different flavor than everyone, for example, at the same time looking at insurance or the people looking at pensions. But you also have commonalities. So it's these both ends that need to be matched. On one end, meet with your specialist. On the other hand, have access also to all the other developments. Because generally, on a regulatory level, technology level, and customer behavior, you're seeing a lot of similarities that you could actually share your ideas around. So this is basically our space. And that space is not just based in Europe, as said. We're part of an international foundation called Fintech Era, which connects globally around 65 fintech hubs. Makes us knowledgeable about the developments there, so we can track what the regulators are doing, who's investing in what, who's cooperating with whom, and make that available to our network to work with. Based in Amsterdam, we of course track what's going on in the Netherlands, especially very well. And here you can see, for example, our latest infographic, where we're trying to monitor what companies are providing solutions in what space. This is 430 companies, and there's always the argument whether someone should be on here or should not be on here. So when we published this a couple of weeks back, we actually also got loads of critics, which we're currently happily processing to a next version, about to be released around the time that Money 2020 is in Amsterdam, because we think that's a very nice moment to actually show which parties are actually in the neighborhood. But you can see it's quite an abundance of difference in solutions. And I think if you would compare it to, for example, other ecosystems like the UK, you see that there's less venture capital available. But with regard to the diversity of solutions, we're actually not doing worse than the UK, for example. only the growth rates generally tend to be a bit slower, given the less venture capital available. And this is the part that we actually like the most, right? And I think it really aligns with Elliot's story before. We're just talking about Lego here. There's just so many ways that you can connect whatever your neighbor is doing into your solution, or the other way around, that you should actually be aware of that. So maybe we should actually turn it now into a dating moment. Should everyone talk to their neighbor to find out what they're doing? No, okay, well, I'll leave it for that. But it's really about actually getting enthusiastic about what is out there in solutions, and as it's actually increasingly building blocks that are available through APIs, right? So they don't actually look like Lego blocks, but, you know, figurative. You can actually start building anything you like. And I think especially what Elliot was also saying is that in the early stages, when you're just trying to discover what works, you don't want to build everything yourself. And so this is the big advantage that startups have gotten over existing organizations, because they've got their hands free. They can use all the solutions that they want, just put them together in whatever way they want, and they don't have to worry at first about compliance and security, about legacy, about all kinds of other vested interests that they need to deal with first before they could actually go to the market. No, they can just give it a try. And especially with all the SaaS solutions and other AaaS solutions that are out there, you could actually start talking to customers first, based on your prototype that you've just built with all these blocks that are out there. And we really want people, not just you in the room, but I think in general also that goes for merchants, it goes for basically everyone out there in the industry that needs to understand this. Because if you want to try something new, and as the rate of change is increasing so fast, you need to try something new every time. You actually want to do it outside of the box and actually start experimenting with all these building blocks that are available. And of course, everyone's sort of fixated on startups versus corporates, right? So I think this is what also the premise of Startup Bootcamp in the early days is like, okay, corporates come here, pay us loads of money, we'll help you understand what startups do and how they work and make you do deals. But it's a very hard combination, because in general, startups and corporates are so intrinsically different. You're basically trying to put two same sides of a magnet together, right? So they're both magnets, so they should actually work together, but they're completely switched around with regard to the poles, so it won't work. And I think you can see that also here, is that basically it looks very interesting because they cross out basically their strengths and weaknesses. But at the same time, we must also recognize that therefore their culture is completely reversed. On one hand, it's vested interest only that determines basically the agenda. And on the other hand, you've got basically the will to acquire anything as setting the agenda. Because that's what startups need to do. If you don't have anything, you have nothing to protect. You only have to acquire, which gives a completely different mindset. But then again, of course, it is interesting to learn. But it's not just as easy to do it directly. And that's why we believe it's actually about a network. It's about an ecosystem. And I think that's also, of course, we'll see that here from a payment perspective, but it's much broader than that. It's actually also about having the complete regulatory environment available, having all technology solutions available, all the infrastructure available, and making that connected and work well in one ecosystem. It's just very hard at the moment because this is just a very simple picture of a very complex world. And so we believe it's actually everyone should have that interest to figure out what's going on here. So basically, if you want to look at our role again, this is basically how we say, if that is one big network where everyone can work together based on supply and demand, how do we get supply and demand to find each other? Which is basically not just easy as saying, like, asking someone, what do you need? And asking someone else, what do you offer? It's generally a process of iteration. And that's why we generally use a vortex like your picture you're seeing here on the screen to actually describe that. Because it's almost like marketing. Right? Before you actually start using a new brand, you probably would like to have heard about it a couple of times before you actually consider it. Well, the same goes with technology. Before you actually realize that something might be relevant for you, you probably need to be confronted with it time and time again. That's why you probably get back here as well, to hear again how some solutions are doing before you actually start working with them. Or you might have heard about them in newspapers or in other media or in another conference. But all those little steps are actually required for everyone to understand what's going on and figure out, do I actually need this, is this relevant? And you might actually wait, depending on your background or the interest in your company, you might actually wait for someone else to move first to make that work. Let's see quickly. I was going to talk a little bit, of course, about the ecosystem. So I've brought up some data to see where we're actually heading. This is Q3 data for 2017. You see that the banking and payments industry are still very dominant in all fintech investments. This is the FT Partners, a large corporate finance house that's focusing on on Fintech. And here you can track basically where most of the investments are going. It's not the latest data in 2018, but I think the picture hasn't changed much. See? And of course, the US is still very dominant, right? I think Europe has a less developed venture capital industry, and for as far as it has developed, it has mostly developed in the UK rather than in continental Europe. So generally, you could say that half of the investment worldwide are being done in the US, and half of the investments in Europe are being done in the UK. So basically to balance that out a little bit. But it's still going pretty well with fintech investments. We saw, of course, some crazy times in 2014 and 2015, but in general, you see actually that funding rates are relatively stable after the beginning of 2017, where things were a little bit shaky. Everyone was, of course, a bit frightened and sort of worried about the Brexit, Trump coming into office, and so on. But generally, things seem to have normalized quite a bit. And especially venture capital is quite on the rise, which I think is a very positive signal, because what we saw is that institutional investors, which are the dominant investors in Europe, also for venture capital, have basically avoided VC money for a very long time and brought that mostly to Europe, to the US. But increasingly you see now that this money is becoming available, also thanks to the effort of the European Investment Fund. And corporate venture is actually becoming increasingly important. So you see now that we saw already that years ago a bank all announced at least $1 million fund, $100 million fund, I mean, to actually start investing in fintech, which of course was very nice from a marketing perspective. But it actually took a while for them to actually pick up that money and start going. And we've actually recently seen quite some nice transactions where corporates were actually either acquiring or investing in larger infrastructure players. And I think that's also one of the keys there, is that we're actually not looking that much more into nice apps or wallets or generally not that much consumer focused solutions, but much more focused on B2B, the infrastructure, compliance solutions, risk management solutions, fraud prevention, infrastructure. That is basically where most of the money is going at the moment. And if we look at the investments, well, here you can see the largest deals of the past year. Most of them in the UK, and funny enough, I always find it interesting that Sweden is picking up quite a lot. But generally, there's quite some money going around. But you see that it's highly concentrated in the UK, especially around London. I think you're all friends of yours, right? What we saw, of course, besides venture capital, is also the ICO craze. Especially over the past year. In 2017, it got completely out of hand, and you see here some nice graphs of how much money actually went into those ICOs. I think we're really seeing a cool down at the moment. Well, at the moment, the regulators are really stepping in and saying, like, okay, this was a very nice way of crowdfunding, but we think it should be regulated like it is crowdfunding, or at least like capital markets. So I think we'll see a little bit of a slowdown there, even though the mechanism is very interesting. Of course, we saw between these bubbles quite a lot of cowboys that actually had no clue what to do with the money, but they still got it anyway. And of course, behind that, we also saw that there was quite some reduction in the price of ICO. So I think that the whole discussion, what we saw is that basically 2 years ago, everyone was talking about Bitcoin. Then last year, everyone was talking about blockchain, because you weren't allowed to talk about Bitcoin, because that's not regulated and we shouldn't be dealing with that. So let's talk about blockchain as a very powerful technology to do more. But it also got kind of out of hand. And now you actually see that both of them are sort of slowing down. Crypto is still interesting for especially active investors, people that are just looking for assets to trade with. And blockchain is becoming less interesting as well, because people see, okay, there's still quite some hurdles before we can actually implement it as infrastructure. So let's keep it on a leash and keep on experimenting, but let's not put this at the table at every meeting that we do, right? And that's what we've done now for the past year, which was really crazy, especially since still people at the meeting had no clue what they were talking about. But I think we've got past that, so we've gotten a bit smarter, I think. Really upcoming, I think, at the moment is the discussion about AI. I think I heard the discussion here at the conference also already a couple of times. But also there, I think we're actually still, it sounds very fancy, but what is it actually? What is it actually doing? And is it really that much different than what we did a decade ago? Or at least what was possible a decade ago? So I see that we're actually going into multiple implementations, and everyone's using buzzwords like blockchain and AI or big data or anything to get their message across. But it's just always good to actually wonder and keep on asking, like, what are we actually talking about? Because I think we have the power now to be smarter, to actually know what we're really doing, instead of just using the buzzwords to get people's interest. So I looked also into a report by Roland Berger that looked at the European fintech ecosystem and looked at what's actually going on, what's interesting for parties to look at when they're looking for how they're doing. So what are the key success factors for these companies? It was very interesting that they found that especially transparency, the digital business model, and especially the customer understanding rank so high in actually making a difference for consumers to actually be the best at what they do. And that especially the incumbent players have a hard time actually playing along with that game. Yeah, I'll wrap it up. I think here this is basically the slide that enforces what I said before, that talent is basically so important at the moment. So capital is becoming so readily available in most cases that the most important part is actually how do you find engineers, but for example also salespeople to actually get the job done. And I made a bit of a wrap up, but I think I shared actually the story already.
We have a lot of options to talk. We have a lot to talk about that's left over.
Yeah, so we can keep on going for hours.
Keep on going. We'll turn over the time. Thank you, Don. Much appreciated. Aww.
Thank you.